Good afternoon. Today I have an update with regards to KP Green Engineering Ltd. This is the logo of the company. The company has jumped 3% yesterday based on some positive information. However, it seems like there has been some profit booking in the stock today. So we'll quickly go through some information. You can see about 8 rupees down today. Overall, that is what it is down in the last 5 days as well. You can see about 25% positive return in the last 1 month. The last 6 months, the company is at a minus negative return of 4% and overall 11% value erosion in the last 1 year. So something we'll have to look as to why this has happened. Possibly the market correction which happened in October, November last year. So you can see 52-week high of 768 and 52-week of 340. The ownership strength is missing the benchmark premium stock valuation at this point. Company is using the assets very well, and the company possesses stable growth history and manageable debt. 2,808 crore market cap. Uh, Price to earnings ratio of 38, which is pretty high. Book value is 53, so the stock is trading at about uh, 10 11 times its book value, which is pretty high. Debt is 36 crores. Company has a cash of 162 crores. Promoter holding is 66.6%. Earnings per share in the last 12 months is 14 rupees and 70 paise. Sales growth of 205%, which is very impressive. Return on equity is 23%, which is again good. Return on capital employed is 30%. Profit growth is 192%, which is amazing. We'll look at some other stats as well. Incorporated in 2001, manufacturers fabricated and hot dip galvanized steel products. High of 769. Face value of the share is 5 rupees. Book value is 64 rupees. So slightly higher book value as per screener. You can see company has delivered good profit growth of 98.5% in the last 5 years. Company has a good return on equity of 25% in the last 3 years. Stock is trading at 8.71 times its book value. Data days have increased from 116 to 142. Peer comparison: ABB, Siemens, CG Power and Industries, Suzlon Energy, BHEL, Hitachi Energy, GE, Voronova, T&D. And you can see sales have grown drastically uh, from 262 crores to 432 crores, so almost 65% growth in revenue on 6 monthly basis. You can see profit is also grown by about 75% uh, in the last 6 months, which is a very good sign. You can see consistent growth in the last 1.5 year from 15 crores to 63 crores, so nearly 400% return in the last 18 months, which is a very good sign. Net profit, again, you can see the same, about 400% growth in the net profit. So overall, a very good sign for the company. You can see year on year the revenue has doubled. Uh, Net profit has also doubled, same as the profit before tax also has doubled, which is all signaling a very good growing trend. The company would be able to add value if it's able to continue the current growth trends and the profit net profit trends. You can see stock price has dipped 10% in the last 1 year. Sales have grown by 99%, profit has grown by 108%, and the return on equity is 25%, which is overall good. Reserves have grown by 57 crores, which is a positive sign. Borrowings have also increased nearly 3 times, so the higher borrowing would lead to higher interest costs, which would impact the overall profitability in terms of the company. So that is something that the company will need to keep a track of. Overall liabilities have also grown, which means that part of the liabilities relate to the higher revenue growth that the company has seen in the last 1 year, which is a good sign. Debtor days increased by 7, inventory days increased by 21, days payable have doubled to 152, which is a concern. Possibly the company has bought a lot of goods and raw material on a short-term uh, payment facility from its creditors and suppliers. So that is the reason why the days payable are so high. Cash conversion cycle has reduced, which is a good positive sign. Working capital days overall, sorry, have also reduced. Return on capital has been 30% in the last 2 years, which is a good sign. Promoter holding is 66.6%, which has been stable. FIs have sold off their investments in the last 1 year, which is probably the reason why the stock price has corrected by 10-11% in the last 1 year. It had gone up to about 24-25%, possibly due to the market corrections which happened in October November last year. Public holding has increased to 32%, which ultimately relates to volatility in the stock and the price in terms of volume as well. Any negative sentiments is going to negatively impact the stock value of the share and also the overall uh, volumes, which again would impact the oversold zone. So all in all, uh, thanks for watching, friends. The video. It's important that we go through some other information that I had. So company had received a 97 crore order from multiple clients. It hit an intraday high of 580 rupees. Market cap is 2,850 crores. The share is 26% down from its 52-week high of 769. Stock has delivered negative return. We've been through that. Company has received a total work order of 97 crores in infrastructure power related segments, illustrating advancing traction in its engineering and fabrication capabilities. The largest portion order is from crash barriers, which are primarily intended for railway track fencing and associated infrastructure, illustrating its expanding role in support of railway safety and infrastructure development. The second largest order book shares from solar projects, accounting for 37.5 crores, including supply of fixed tilt mounting structures and tractor type module mounting structures. In their transmission tower segment, it secured orders from a total of 7.8 for supplying materials and structures from 33 kVA to 400 kV and suited to substations, cable trays, GI structures, and isolator support. KP Green Engineering operates in engineering and manufacturing of steel structures, windmill and telecom towers, solar mounting structures, crash barriers, cable trays, and pre-engineered buildings. In terms of sector supports, the support power transmission, telecom, solar, substations, and highway infrastructure. Important disclaimer before we end the video, friends. Investment opinions and recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. These do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial losses. So please exercise your own judgment and conduct proper due diligence. Author bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended to consult a qualified financial investor before making any investment decisions. So thank you, friends, for watching this informative video. Please share this with your friends, family, and associates so that they could benefit from this information overall, and would request you to share your valuable insights in terms of improving the content of the video. So we'll catch up with another video very shortly with more news and information on the current trends of the stock market. Thank you.